All right, let's continue on where we left off. The last thing we had done in the previous video was the journal entry from the October 9th payroll. And we had checked that against our source document that it gave us and everything was good. Okay, and so now we can X out of that. And we're going to go on to our next instruction. It says generate and post the employer's payroll tax journal entry. We know that every time we have payroll, we have the journal entry that's from the totals of the payroll register, the employee part, and we have a second journal entry that's the employer costs, where we match Social Security and Medicare, and we also have to calculate out the FUTA and SUTA. Okay, so we're going to go to our next source document, and we go into tasks, and we go down to employers payroll tax journal entry, and you want to say yes, and there it is. Okay, and so we're debiting payroll tax expense. Notice it's an expense. It starts with a 5. Okay, and we're crediting our various liabilities. Here's our Social Security payable, where we matching the Social Security that came out of the employees. Here's the FICA payable HI, which is our Medicare payable. That's where we match the Medicare that came out of the employees. And FUTA payable, that's 0.006 times the taxable amount. And SUTA, which was their SUTA rate times the taxable amount of SUTA wages. And then we add those 4 together, and that equals the payroll tax expense total that has to come out of the employer's pocket. Okay, so it's a delightful joy that at least these 2 journal entries that we have to do every time we do payroll are done for us, and we just take a look at them, make sure they look like they should, and we hit post. Okay, so we're good to go, and they matched our source document as well. So we go on to our next instruction. Now, in this particular company, they have a separate payroll checking account. And so they have a regular checking account and a payroll checking account. A lot of companies have that so that the checks that they give out to the employees are cashed out of that payroll checking account. So somebody from payroll will do the bank reconciliation and deal with the bank statement, and then they're the only ones that know how much everybody's check is. You don't have somebody from accounts payable or whatever who's doing the bank rec, and all of a sudden they know all the payroll information. So a lot of companies will have that. Now the problem with the payroll cash account is that you have all these checks coming out of that checking account, but nothing is going in. Whenever the company sells its product or service to customers, and the customers give us the cash, we're depositing that in the regular checking account. So nothing is going into the payroll checking account, only stuff is coming out. So we have to make sure that we transfer some money out of the regular checking account and put it into the payroll checking account so that there's enough money to cover the checks. Okay, and so here they give us this memo that came from the payroll department to the accounting department, and it tells us that the net pay, the $12,339.69, which was the net pay from the October 9th payroll, they're giving us a memo to say we need to transfer that amount of money from the regular checking account to the payroll checking account. Now, other than the 2 payroll journal entries that they will work up for you, all the rest of the journal entries you have to do yourself. And so we're going to click here on Add New Entry. Okay? And so we put in the date, which is October the 9th, and we want to debit the payroll checking account. So we click on Insert Debit Credit. Okay. Okay, and you can do the down arrow and it brings up the chart of accounts. So we want to debit the payroll checking account because that's where we're putting it into, and you can tab on over to the debit column. We're going to debit that, the 12,339.69. Then we're going to say Insert Debit Credit again. Now we'll put the credit part in, which is the regular checking account, which we call cash. And that's going to be the credit of 12,339.69. Okay. Now, okay, my debits equal my credits. So in this particular project, they don't have you do explanation. So typically we would put an explanation in and then skip a space, but with this software, all the journal entries are just rammed together. There's no skip space, there's no indenting the credit accounts, and there's no explanations. It's just the way the software works, so we deal with it that way. But our debits do equal our credits, so we're good to go. And so we're going to click on the post, and we hit OK. And we can also go on our source documents, and it shows us the debit and credit, how it should have looked. Okay, we go to our next instruction, and this tells us to display the general journal report for October 9th. Okay, so I'm going to X out of this, and I'm going to go under, I have to go up to the general ledger module and go to the journal reports, and there's the general journal. Okay, so this shows me the general journal transactions that we have so far, the 3 transactions we've done so far. And this is the start date of October 9th and the end date of October 9th. Now for the project, I want you to give me a general journal that's for the whole month of October. So you would put a start date of October 1st and an end date of October 31st. And hit apply. And then once that's in front of you, you would hit print or download, and you're gonna post that into D2L as part of your project. You want a general journal report for October, one for November, and one for December, one for January, and one for February. So one for each month. Okay, here's our source document, shows us the same thing, and so ours matches, so we're good to go. Our next instruction tells us to display the general ledger report for October 9th, so this is where they posted it. So again, I'm in the general ledger module. I go to ledger reports, down to general ledger, okay, and this is going to give me the general ledger for the date of October 9th, and it goes from cash, which is the first account, all the way to payroll taxes, which is the last account. So here's cash, here's my beginning balance at the beginning of October, then it shows the October 9th credit, and the beginning balance was a debit. Debit and credit is subtract, so it subtracted that. here's our new running total debit balance for cash at the end of October 9th. And then we go to payroll cash, and that shows where they've got it switched around, but it shows where the payroll cash was deposited, okay, and that was a debit, and where we credited payroll cash for the net pay. And so every payroll, we're doing that. We're putting in exactly what we're showing as net pay that's going to come out. And so we should always end up with a 0 at the end of each of one of those situations. And then here's our FICA Social Security payable, we put in the employee part of 958.33 credit and the employer part, and so credit and credit is add, so those two, the previous balance and this is added together, and we get $1916.65 that we owe out on Social Security is at the end. So all of these accounts are here. Now, what if you want to look up just how much am I going to owe out for on the 15th for my 941 deposit? Well, you don't have to look at all of those. You can start with the OASDI, and you can end up with the FIT. There's a couple accounts in there in between, and hit apply. And so now we only have a few accounts to look at instead of a big whole roll of accounts. So that can be helpful to shorten those up. You need one general ledger printed out after the last payroll in December. So at the end of December, you want to do a general ledger before you get into January transactions. Print out a general ledger. Okay, now here's our source document, and that shows the general ledger, and it shows that we match